And so, when you see this kind of sophistication, coordination, this kind of wealth, it should be something that shouldn't be taken or shouldn't be underestimated, and should be taken very, very seriously. So yeah, I think it's just beginning, but it's not just China. Take a look at India. Their reserve bank bought 1.5 times the amount of gold they bought all of last year, just in the first 4 months of this year. And following a theme that we continue to see across the globe, they then repatriated 100 metric tons from the Bank of England, which means they're holding almost all of their gold right now. That gold's been there since 1991, much of it. They would leave gold, these countries, at the Bank of England to trade on the LBMA and at the New York Fed to trade on the COMEX. Well, what did we just see? We just saw, what banks did we just see pull their metal out of the COMEX?
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. With us is the esteemed Andy Schechtman. You know him well from milesfranklin.com, one of the largest bullion dealers in the country, and in fact, the only one that I personally trust, having gone back nearly 15 years. And Andy, we used to say, when you buy, they ship. Crazy things going on out there. I mean, gold hit 24.50, pulled back ever so slightly. As we're talking now in mid-June, it's 23.18 and change for gold. Silver hovering just under $30 again at 29.40. What should you take from all that's going on now?
It seems to me over the last several months, Kerry, and first of all, it's good to be here, and crazy how fast 15 years flies by. I guess as you get older, my dad always says, like a roll of toilet paper, it spins faster and faster and faster. When you're young, you don't notice the passage of time nor the depletion in the roll. But as it starts to get closer, as you get older, you see it spinning faster. You notice the cardboard a little sooner. But anyways, it's good to be back. It's like the gold and silver markets almost seem to be playing by a new set of rules. And things seem to be very different. There's certainly a battle being waged between, the cartel bullion banks who are wickedly short and the commercial banks and the central banks who have an insatiable appetite for commodities, which to me seem to be, there's a growing realization that these commodities are worth more than the currencies that purchase them. And that's a big deal. So yeah, I think if I were to sum it up, I would say that what for decades has been this trend of the price being set by the Western banks and the Western institutional investors seems to be breaking down. And I think the underestimation of the West, or the significance of the Western gold shifting eastward and commodities in general eastward, is the underestimating of this significance is baffling to me. And I think it will be a big mistake. So yeah, things are changing. That is for sure. And commodities in particular seem to be at the center of this change. And I don't think that will change anytime soon.
Yeah, well, I talked with our mutual friend, Rick Rule, last week, and gave me some real insights. A market that was like almost completely neglected, natural gas. He likes to buy really cheap when things are trading at prices that they can't possibly keep going at, and then just be patient and don't lose conviction and hang around. And, we saw it with gold. We saw it with silver. My good friend Nick Santiago called the bottom of silver at $17, and it's never looked back. I mean, how high can these prices go in terms of dollars?
Well, a lot higher than people think possible. And I've heard Rick say that many times, that the most money he's ever made, it would be buying assets that have been, left for dead. And that's the whole idea between buying low and selling high. We all learned that when we were little kids, but no one ever really does it. But when you realize, as an example, that The LBMA is trading 292 million ounces of silver per day and 20 million ounces of gold per day, but yet admits that their platform is trading actually 10 times the volume they say that they're settling. In other words, if I buy 10 and sell 20, or let's say I sell 20 and buy 10, the net result is 10. And so they'll just publish those 10, not the 30 trades, which would mean they're trading, 200 million ounces of gold per day at 2.9 billion ounces of silver per day. That rehypothecation, the issuing of way more contracts than there are bars behind it, enables the price to be suppressed. But what's different now, and I would say this time it is different, and really been culminating over the last few years, is the sophistication, the understanding, the coordination, and the wealth of the countries in the global south and southern hemisphere that understand that this is a new game, as Zoltan Pozsar says, all about commodities. And they are standing for delivery using the brain-dead suppression that these bankers put on the exchanges to support the illusion of bond supremacy and of a strong dollar to their advantage. And they're draining the world's exchanges. The LBMA is down to its second lowest level of silver in history. The Shanghai Gold Exchange down to their lowest level of silver in I don't know how many years. The COMEX, we've been talking about all the deliveries off of COMEX. It's not just silver. 5 weeks ago Friday, we saw $500 billion rather worth of gold delivered off of COMEX, and it ended up in Hong Kong. And I don't think a lot of people understand this, but there was a contract that was developed in 2000. Let me see if I can find the actual date. There was a contract that was developed in 2015. And this contract, what it allows for is the delivery of gold to a COMEX-based warehouse in Hong Kong. It's a Brinks facility in Hong Kong. And just about anything that is delivered to Brinks Hong Kong is done on what's called an exchange for physical basis, where the contract is bought in the West and then delivered in the East. And 5 weeks ago Friday, we saw $500 million worth of gold. The number was 7,560 kilobars of gold, which is what the mini contract is on COMEX, and it is what is traded on the London Metals Exchange. So you're talking, who's got that kind of bread for 7,560 kilobars, or just over $500 million worth of gold delivered to Hong Kong? And the idea or the thought is that these bars are then immediately put into a truck and driven to the Shanghai Gold Exchange, where they are then disseminated to the countries who are accumulating physical metal using the Western suppression to do so. And so, when you see this kind of sophistication, coordination, this kind of wealth, it should be something that shouldn't be taken or shouldn't be underestimated, and should be taken very, very seriously. So, yeah, I think it's just beginning, but it's not just China. Take a look at India. Their Reserve Bank bought 1.5 times the amount of gold they bought all of last year, just in the first 4 months of this year. And following a theme that we continue to see across the globe, they then repatriated 100 metric tons from the Bank of England, which means they're holding almost all of their gold right now. That gold's been there since 1991, much of it. They would leave gold, these countries, at the Bank of England to trade on the LBMA and at the New York Fed to trade on the COMEX. Well, what did we just see? We just saw, what banks did we just see pull their metal out of the COMEX? We saw, I don't know if I have it here. I can tell you it was Egypt, it was Saudi Arabia, and a half a dozen African countries. They did the exact same thing. I don't have it written down, but I read it just recently where, all of these banks over the last month and a half, these central banks have been repatriating their gold both from the New York Fed and from the Bank of England. And this is a constant theme of removal of counterparty risk. And can you blame them when you see the House say we're going to confiscate, not just sanction and freeze the $5 billion that we're holding of the Russian assets? We're going to take it, we're going to give it to the Ukraine in the form of weaponry. And then you have the European Union that said we're going to freeze, of course, not steal outright yet, but we're going to steal the interest from the securities that we are holding of Russian assets and use it to fund the Ukraine. So it's one thing to sanction. It's another thing, and again, half of the world believes that the West, in particular the United States and the UK, and it believes that we are hypocritical for all the things that we do that have no recourse, yet other countries do things that have great recourse. Well, these countries, it's one thing to sanction, it's another thing to steal, and to use it to fight or to fund the country that you stole it from, that they're in a war with. This is a line in the sand you don't come back from very easily. This is breaking a glass against the wall and then thinking you can put it back together before mom and dad come home. I don't see it happening. So yeah, gold and silver have never been more important, not for any other reason than you can see the biggest and most well-informed money in the world making concerted effort to accumulate it under the cover of Western market suppression and then repatriate it with little or no media attention. But when you see all of these countries, in particular Saudi Arabia, repatriate their gold from the New York Fed, it's real. These countries don't trust us anymore. And this is all about counterparty risk or the removal of counterparty risk.
All right. So let's bring it more personal. Your business. All right. I know it's been booming for the past 18 months, almost to the day you moved down to Florida. Things like took off. It was like you did the ultimate short sale. You shorted Minnesota and you bought long in Florida. And kind of that's what's been happening in your business. Basically, your clients are getting out of dollars and getting into physical assets.
Correct. Yeah. But what's interesting, Kerry, is that I would say in large part since December of last year through maybe 4 weeks ago, it's changed lately, but you know, the first half of this year has been characterized by a lot of selling into the market. You look at the global or the U.S. ETF holdings, they're falling at a 45-degree angle, which Bill Holter will tell you that's the big money backdooring gold out of the ETFs. But a lot of it has to do with the traders or the investors who have been selling GLD and maybe chasing things like NVIDIA or Bitcoin, who knows, or maybe paying bills in this highly inflationary world we live in where the cost of living is accelerated so much. I don't know, but there has been a good deal of selling into the market, and which confuses me in a great way. I mean, looking at what Rick says, to me, that's a contrarian indicator, and where you see the public selling, at the same time, the smartest and most well-funded and informed money in the world, the commercial and central banks, have been massively accumulating it. So we've seen a little bit of reversal here lately. But when I look around and I see the idiocy of our policy abroad and here at home, where the borders and the immigration process, the electoral process, the judicial system, the lawlessness in the cities, all of these things are not lost on the rest of the world and horrify me. I'm surprised that people would be letting go of their metal in search of quick returns in things like NVIDIA or Bitcoin, because I think this is the time more than ever where you need to really hold on tight to your conviction and have strong fingertips, because things are about to change, I think, in a meaningful way. When you see these central banks accumulate the way that they are and then repatriate the way that they are, that's significant. And it shows a lack of trust and a lack of faith in the Western system and a lack of trust in the governments that control it. So, yeah, things are shifting, things are moving, no question about it.
Yeah, and for good reason, too. And that's and your business has been a direct beneficiary of this. I think a lot of individuals are starting to catch on. And hey, look, even China, right? Their real estate market has crumbled. It's imploded. So people in China, if they do have any money left, and, literally hundreds of millions of people who were gladly included in the middle class are now out of the middle class. But the ones left, they don't trust the yuan by any stretch. And I remember I was there in 2017, and guy was telling me, no, I'm not into gold. I'm into real estate. Real estate's where it's at. And I haven't talked to this guy in a while, but I guarantee you his attitude has changed.
Yeah, I'm sure it would change, and rightfully so. But I think you could say the same thing about the dollar, about our markets in general. our bond market, which it was its worst performing year ever, maybe in 2023, as they raised rates 500 basis points in a year, where the first time ever in 45 years anyway, the price of gold had less volatility than the 10-year Treasury. So I think what you see there is the best laid plans need to be reevaluated from time to time. But all of this, you could argue, is the symptom of a over-leveraged and undercapitalized world where everything is on leverage. And just as bullish as it was for asset prices in a low interest rate, easy money, leveraged environment, the deleveraging in an environment where when this stuff starts to break, as it appears, I think it's bound to anyway, the lack of credit or the contraction of credit will be something that will amaze people, because the amount of credit that is applied everywhere in this society is what makes the system move. And if you start to rein in and liquidity dries up as banks begin to feel pressure, and again, everyone talks about rates going down. I see rates ultimately going higher. Yeah, the Fed may try to lower the short-term rates, but the ultimate, you have to ask yourself, who in their right mind would buy treasuries of any duration in the country who has chosen to weaponize the treasury market, confiscate Russian assets, Russian treasuries, and give them to the country that they're fighting? Who would trust that in an environment where the treasury market has gotten walloped as rates rose at the hand of the Fed, and then a country that has chosen inflation over austerity always, and will continue to do that? We're printing we're adding $1 trillion every 100 days.
Yeah,
that took 200 years to do that. Why would anyone buy our treasuries? And even if the budget was balanced today, which it's not, who's going to pay for the $99 trillion shortfall in Medicare Part B, the $22 trillion shortfall in Medicare Part D, the $77 trillion shortfall in Social Security, government, military, pensions, and entitlements that are all off balance sheet and not funded? Who's going to pay for that? And you got the Congressional Budget Office, which is a nonpartisan group, maybe the last one in Washington, who said by 2031, 100% of tax revenue will go just to pay the interest on the debt and the mandatory entitlement spending like Social Security. And that doesn't even take into account the 17 million people that are in here illegally. Who's going to pay for them? Their food, their clothing, their housing, their schooling. And if you realize that military spending is discretional, not mandatory, who's going to borrow money to an insolvent, broke country that's lost their bearing to fund their military that's going around the world bullying people? Nobody. And so when you talk about rates going lower, it's a bunch of crap. Ultimately, they have to go higher. And in an environment where rates go higher and the strain on an over-leveraged, undercapitalized system becomes real, you'll see an unwinding of credit that will, I think, be exponentially more devastating than the extension of easy credit and cheap money. In essence, the inverse in this world that is as leveraged as it is could be very shocking. So this is not about buying gold and silver to become wealthy, Kerry. It's because it is wealth. And the biggest money in the world, the central banks who know the playbook, they're not only their rampant accumulation, but their removal of counterparty risk by repatriating is huge. I think it should not be underestimated. And this flow of gold and commodities, whereby commodities are becoming worth more than the currency that buys them, this flow from west to east, it shocks me how underestimating the talking heads are at looking at this. They're underestimating the significance of this, and it's a big deal. So, I think now more than ever, it's time to be a contrarian, or you'll end up being a victim.
Yeah, I could not agree with you more. And, it's just, you really don't have a lot of choices. How do you feel about Bitcoin these days? I mean, it's trading mid-60s now. I generally buy a little bit every Sunday night as I find the prices pull back on the weekends. Generally, not always, but a little bit here, a little bit there. I've accumulated a nice little position in it. It's up 40% from when I started. I would swing trade it for a while, and then after it started getting close to new highs, I ended that practice, just accumulated. Obviously, you can't put it in your hands, you can't hold it, you can't touch it, you can't bite it to make sure it's real, but it still appears to be an asset that has value.
Yeah, I mean, it does. I guess I look at things from look, I don't want to be in a position, Kerry, where I look back and say, damn it, I should have done that. I knew I should have done that. Most of us do that in our lives at some point or another. We don't trust our intuition. And while I don't truly feel the same way about Bitcoin in any way, shape, or form that I do about physical commodities, I have, largely due to some conversations I've had with guys like Mark Moss and Natalie Brunell, I've been dipping my toe in little bit at a time. Every couple of weeks, I add a little bit of Bitcoin to my portfolio. I don't own a lot, but I own enough to where I will not punch myself in the ear if I was wrong. Look, the one asset that all the central banks are buying is gold and physical commodities, but I would be remiss if I didn't at least have a toe in the water as it pertains to Bitcoin. Now, the last time I said something like this publicly, I got an email, first one I've gotten in a long time, from our old friend who, who's saying, what about me? I told you about this a long time ago. And to his credit, he did. He just lacked the decorum and the way of speaking in a way that resonated with me. So in having lunch with Mark Moss and Natalie Brunell in Vancouver, their manner and method of disseminating the information was such that it resonated with me. And so I've added a little bit. And so I'm not adversarial with it. And I think it's a mistake for our two camps to be adversarial. We should be complementary, because in essence, we both, I think, see the reason the same. And that is, the idiocy and irresponsibility of our fiscal policy and the brain dead monetary policy. The difference, really, to me, is that one camp wants to get wealthy and the other camp wants to not lose what they've made. And so if we marry those two, you can have the exponential growth potential of Bitcoin and the savings, the historical savings, and keeping pace with inflation value of gold. And so you take chips off the table that you profit and you put it into the other pocket. That's gold. So we should be complementary of one another, not adversarial. And that's really the most important thing here. So I can't go around in good faith saying this if I don't own a little bit of it. So I have been buying a little bit, and I'm glad that I did. But look, I'm a hard asset commodity in your hand type of guy. So it's not an easy thing for me to do, but I understand the argument enough to where I've acquiesced and I am doing it.
Hey, I'm totally agreeing with you. And same here. I was always a dyed-in-the-wool hard asset investor for sure. And I like having the hard metal in hand. But on the other hand, it's like you have to be a fool not to recognize that when you have ETFs all over the place, right? And everybody is, more and more people are pouring into this asset class, not a currency. I will never call it a currency until I could send Miles Franklin my Bitcoin and get gold. But
yeah, well, we do take it through BitPay. BitPay is a group where we issue a BitPay link, and the funds the crypto goes to BitPay. They pay us dollars. So it shocked me how efficient it is. I had someone do a very large order using Ethereum. It was like $3 million, and the money came to us in literally seconds and cleared, and we shipped it out right away. That's something that certainly you could argue that cryptocurrency is far more efficient than the antiquated SWIFT and wire system that can take a long time and has to go through intermediary banks and the whole nine yards. So yeah, there are certain parts of this whole process that really is intriguing. But it's like I'm afraid to even put my thumb drive thing into the computer. I mean, it scares me. I don't know what the hell I'm doing. I have a friend who helps me do it. And, again, it's like I'm like an old timer who the kids laugh at, but you know what you know, right? And and I'm good at what I do. And every time I've tried to do something else, I'm really not so good at it. But I'm acquiescing here. The old dog can learn some new tricks begrudgingly, and we'll see what happens. I don't want to go back and say, damn it, I knew I should have done that. So Don't make a mistake. The moral of the story is trust your gut. Listen to your voice. And if you're wrong, it's easier to be wrong when you did it on your own volition and weren't talked into it. And when you're right, it's a whole lot better. It's kind of like clients, when you present them with something and they do it and it goes the right way, they're a genius. But when it doesn't, you're an idiot. Yeah. And it's the same thing. I would rather
listen to you.
Yeah. I'd rather take accountability for my actions.
Yeah. Hey, same here. In the end, you are always responsible, whether you would like to blame it on somebody else or not. It's you wrote the check, you put the button,
right?
It's you. But just on Bitcoin, I've got 0.4 of a Bitcoin floating out there. And luckily when I lost it, because I had upgraded my iPhone and it wiped out my password and I could never get it back. Back then it was $200. The problem is now it's 30,000. Now, I would have probably never kept it that long anyway, but I'm thinking of going to a hypnotist to try to remember what my key is. You know, I cannot.
Good luck on that.
Find it.
Good luck on that. If that works, well, I'll go and see a hypnotist too for a myriad of other things that I've probably forgotten over the years. But that has more to do with my social life and growing up in a house where my parents were hippies and. Than probably anything else. But you know what? Hey, we all make mistakes along the way. And that to me is the thing that scares me the most about cryptocurrency. But, you know, there are some people who laugh that away and it just is like anything. It's like the first time you ever fire a handgun at a range, you're scared and you don't know what to do. And the first time you pull the trigger and, you know, and maybe if you get it jammed, what do? You're afraid to. After you've done it for a long time, it's no big deal. Pop, 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 boom, boom. You know,
I love it.
And I just think that it's like anything; it takes time and repetition and experience and know-how. So I'm slowly getting.
First time you pull that trigger, man, you don't know what you've unleashed.
Right?
I must be insane here. This is the power, you know, the whole thing. But that's called empowerment.
Yeah.
Control, right? Yeah. So, hey, you're going to be at Rick Rule's conference this year?
Of course. I wouldn't miss it. It's the only one. That and the Vancouver Resource Investment Conference, Jay Martin. Those are the two that I would never miss. And I will be there. It's my backyard, as you know. It's not too far away. And look forward to seeing you there. And hopefully some of the people listening to this show, it will be nice to see put some faces to the people I talk to online all the time.
All right. Hey, we appreciate you coming. MilesFranklin.com, online system ready, operating.
It is. We have a new one also coming out at the end of the month. We're upgrading it. Version 2 will be a lot more user-friendly. And if you want prices or questions on anything you've heard on this show or anything else, send an email to info@milesfranklin.com and say Kerry Lutz or the Financial Survival Network sent us, because the prices that we have that we don't post online, we only allow limited purchasing up to 10 grand online. If you send us an email and request that price list, you'll see that the prices that we will send you are as good or better than anywhere in North America, but we keep that closer to the vest. So info@milesfranklin.com with any questions or just the price list, but make sure you say the Financial Survival Network or Kerry sent me. And it would be very important to us to know where it came from. And we'll treat your listeners with white glove. That's my promise. We've never had a customer complaint, fortunately, and going on 35 years, we'll make damn sure your listeners are not the first.
And I'm just going to read something because I was just scanning the company, see if there's anything I don't know about. And I came up with a review on LinkedIn, and it says, "Is Miles Franklin legit?" And I'm just going to read you what it says here. I think, it says it all. Miles Franklin has been in business since 1989, making them a credible and experienced precious metals firm. They have earned positive reviews on Trustpilot and hold a Better Business accreditation for many years. Their extensive history and customer satisfaction attest to their legitimacy in the industry. And I would add to that, where many others who are thought to have been at one time legitimate have been proven otherwise.
Yeah, I don't know. I've never seen that, or I don't know who wrote that, but thank you, whoever did. Look, in a world where information is so readily available at our fingertips, it's an easy thing to research, and we're very proud of it. And, even though I live here in Florida, not too far from you, I left my corporate entity in Minnesota, even though it would have saved me money, because it is the only state in America that regulates what is a federally non-regulated industry. So we are held to a far higher standard. Most companies in America boycott Minnesota as a result of this regulation, this accreditation, this licensing, and this bonding that is expensive and invasive in terms of privacy and continuing education and compliance. It's a drag, but when in the end, we are held to a higher standard, and I realize that, and that is a benefit to us and to the end user. So that's why I left it there, and it's something we're very proud of, and we embrace, regardless of how onerous it truly is. But coming on a show with a guy like you, who's, for years, your reputation is your currency. And we take that very seriously. And, I don't want to disappoint you, my friend, or anyone else, or hurt anyone by any stretch of the imagination. So it is our mission to uphold this amazing track record that I still can't believe is in place. And because we've made mistakes, but I think a person is defined not by the mistakes they make, but how they make good or rectify or deal with said mistakes. So we're pretty good at that as well, too. So for what it's worth, thank you for the kind words. Thank you for the years worth of friendship and this relationship that whereby you trust me to come on your show, where trust is your currency and information. And we take that seriously. And I look forward to picking up where we left off. We'll have to do one in person at Rick's show. But at any time that the world beckons or information is worthy to speak about, let me know. It's always an honor to be here with you, Kerry.
You got it. And the gentleman who left that, it was just recent, May 25th of this year, is Yusuke Kohara. He appears to be a client. And
I have no idea who Yusuke is, but thank you, Yusuke. I really appreciate you, brother.
He's on LinkedIn. I'm going to put a link in the show notes to his review because I think hey, I can say you're great. You can say you're great. But when you have a third party who you don't even know who the guy is, and he says you're great, that carries more weight. That's called social proof. And I don't need any more proof. I mean, I used to say when Andy would come on, I'd say, Miles Franklin, when you buy, they ship. Because believe me, I haven't been totally screwed over on gold, but partially. I've waited months from a company where the owner, I could visit him if I want to, because I think he's in the federal lockup.
Well, that'd be. Don't even have to tell me. That would be the one up in Washington State. Yeah. They were known for that. Northwest Territorial Mint.
You see,
you know what?
There's all over.
Yeah, you know what? And that's a big deal. Look, it's federally non-regulated industry, so it lends itself into this kind of shenanigans, let's say. But in any case, I do appreciate it, Kerry, and I look forward to picking up where we left off. I know you and I have lunch planned in the near future, so I look forward to seeing you in person. And in the meantime, thanks for having me on, and we'll do it again soon.
All right, got a question for Andy, myself. The email address is kl@kerrylutz.com. The link to Miles Franklin's in the show notes below. And while you're at the site, financialsurvivalnetwork.com, please sign up for your free newsletter. And Andy, we will see you soon.
See you, my man. Stay well, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.